Hello and welcome to the Wednesday check-in brought to you by David Gokhshtein and the Gokhshtein News Network. I am your host, Landy, and today is January 28th, 2026, and we are post-FOMC meeting this Wednesday. We do, of course, have the Thursday candle open, and you'll notice that I have marked one of the higher lows that Bitcoin lost and has been rejecting right now at about 90,385 on the daily. And that's going to be kind of, the criteria that Bitcoin needs to, recover overhead right now. Of course, there is kind of a zone between that closing higher low structure right there and the actual low side swings here that Bitcoin has, kind of closed in and then been rejected, on closes now. Multiple times. So we have, 2 times that it has closed and rejected and went up and hit that area. And the potential for Bitcoin to head down from here is, substantial. But, if we do see a move above another area that you need to pay attention to on the daily for Bitcoin, this would break the downtrend. And that is at 91,150. And again, we need to see closes above $89,000. Right now we've got closes, in and around 89 with no consistent push above into that 90 to 92 area. And I do think that bulls need to watch that area closely. And bears are hoping that this is a rejection that continues lower. Now, I do want to note on the bottom side, this tagged a weekly right at $86,000. That would be continuation down to test the lower second standard deviation, which is in and around some lows as well. But below $86,000, kind of 83.5 to 84 to 86 is kind of the zone of interest. I've mentioned this quite often. But I wanted to bring up something more important that you're going to see as a narrative on your timelines. And that's where we can bring up the bear flag that you're going to see everywhere. This is something that you're going to see a bear flag with a measured move as you scroll your timelines. I don't know where's my top side here. I thought I had another line here for the highs. You're going to see something along the lines of this. And this is going to be a common theme that you're going to see if Bitcoin is heading down. And you're going to see something like a weekly chart. You're going to see the measured move. You're going to see the bear flag and then the measured move. And everyone's going to call like $50,000 to $60,000. And while that move could be in play with the lower low and lower high structure that we have going on now, especially with the lower high being coming into this week, I'd be very aware of a move to the lower second. As I've mentioned many times prior, very aware of a move post expansion, a move or a retest of the lower second on the weekly, which is at $75,000 now, right in the thick of, the lows over here. Where the low came in at that 74,400 area. And of course, the close there at 78. And there's a couple of swings here in the mid 70s as well. I'd be aware of a retest if it does continue to fall through, especially if you see $86,000 close below. And then we see a retest of these lows or a swing below them. Be aware of any kind of a retest that comes down here and then gets bought back up above that 80,500 or so. It would look very similar to what we saw once this lower low was put in to lower high over here that I mentioned on Monday, right? Where we had the lower low swing down here after the lower high came in at 89, with that close at 86,000, which by the way is where the prior weekly low came in. Most recently, we got a swing down towards the prior area of resistance over here. Didn't quite hit it, got front run above that 73,835 here on spot. In some cases, it actually did hit the top side of this structure over here on some derivative exchanges, but then got bought back up and then subsequently took out that lower high there at 86 and then went on a march to new all-time highs. This is something where if we do see this start to play out in this manner, you're going to see that, oh, this is a retest or rejection here, and they'll even try to fit the line so that it kind of it's look, it's touching. Look, it's in the eye of the beholder. Look there on my chart, it's touching. It was a perfect retest. Called it. Just beware that it, while even might be something that starts to play out to the downside, especially if we start to see daily closes below 86, be aware of that scenario like what we saw back here. Not necessarily a bear flag, but that scenario that we saw back here with the lower low, lower high after an all-time high. Now, granted, this was also a bit different because we got the lower high close, so this was a caution. We didn't get that same caution up here outside of closing below the 124,500 area. But that's where we had the lower high, lower low. Lower low, lower high, and then a lower low swing. Lower low close, but it closed inside of the prior swing and then went and took out the lower high, thus preventing the trend reversal, the bearish trend reversal setup from actually playing out in totality into the range down here. So just be aware of that. You're going to see a lot of that as a narrative. And one of the main reasons that I want to point out is, look, momentum is very low. Doesn't mean that it can't turn around and go lower. It is pointed up on closes above 85,800. So again, $86,000 coming up again. We're also right on the edge of the bearish control zone right now on the weekly. We've gotten the early week bounce thus far. And it could dip down even further in there as well. But just be aware that, as long as 86 is holding, especially, there's not much doing in terms of this structure. So as long as 86 is holding, well, be aware that we could get a higher low, or we could get a lower low swing with a close above the 80,500 that tries to take out the 98 in reverse structure. It's really on closes below that 80,500 that I think it starts to favor the bears more aggressively. But then, the bulls still have a, prior support, and of course resistance that essentially was tested, at least on the highs, to try to bounce from as well. So this $98,000 high becomes a very important area for both the bulls and the bears, and it is a very important area right now. You'll notice that I'm not bringing up all of the normal, weekly zones of interest. You can reference Monday for all that stuff. I just really wanted to check in, kind of, give my thoughts on where things are right now in terms of narrative that I'm starting to see develop on the timeline. Understand that when it comes to patterns like this, especially, like it's a bear flag or a bull flag, yeah, sure, they play out. But they often have, just like, head and shoulders patterns and stuff like that, and inverted head and shoulders, they often have a fairly low hit rate. So I would watch the horizontal levels versus giving the pattern the foregone conclusion of being this is going to be playing out kind of a thing. Even if we do see some lower prices from here. As it stands right now, 91.5 to break the daily downtrend is kind of where I'm looking. Fairly low on momentum. It is pointed up on closes above 87,850 or so, bouncing off the bearish control zone. But the opportunity still favors the bears right now until we see some actual closes back above 90, headed towards that basis band just above there, and that 91,150. And starting to get above there, and especially 92 to give Bitcoin a shot back to the top side around, that 92 to 94, and then potentially work its way up towards 98. Otherwise, if this is another lower high, watch $86,000. Anywhere below there, 83.5, this swing low over here is going to be kind of the name of the game. 83.5 to that $86,000 low right there is kind of the name of the game. Bitcoin can safely swing in there even lower. If it's closing in there and starts to reverse, then it just has to take out this lower high at 90,476, almost 90,500. Otherwise, we would be looking at that low around that 80,000, 80,500 area, maybe even a swing into 78 to 80, which is that weekly, and then possibly down to the mid 70s. So that's Bitcoin in a nutshell. Let's go look at a few other things that are starting to play out in the commodities markets. We have $5,500 gold. We did hit 56, I believe, or just shy of $5,600 gold. Headed up towards a 2786 at, you can call it 57. Kind of give it some room on swings. And, I noted that it could still continue like 53, 54, and it decided to absolutely put a high in on Wednesday of 54. So, and the next big area would be the area that it's currently trading in, right? 55 to, I would say, even give it room to the upper third here to 57.50, being fair game. As long as it's trading and closing above 5,000 now, it can continue to plumb the highs with this increasing volatility. If it does drop the upper first here around $5,000 or 5,100, kind of as a zone here, pay attention back down to where the gap came in around that 46 to 4,700. And then it's still, my bias is still right around this last higher low around 50 or 45 to 46. So, that's really the look on gold. Don't get in the way of the move unless you got a plan. And in this case, is it getting hot to trot? Yes, it is. Absolutely is. Could it use a correction? Yes. But it can stay up here and still plumb the highs until we see a daily high put in, which I would not, based on the current day's candle, depending on where this ends up, realistically from here, it'd be looking 5150, 5160 as putting in a daily high, and it closes below there. And then we can start looking back to, 46, 47 area. And then, keep a very close eye on the 4,500 to this 45.36 low. Other than that, it's sideways and up. Nice re-expansion on the weekly. Closes anything like this, we're going to have to start entertaining 6K and above. Maybe even 6,500 on longer term time frames. We're getting pretty extended up there. So, I would pay close attention this week. See if we start putting in a daily high. Silver. Same deal, hit the 2786 at 118, did swing above 119.402. So 119.40, 120 in the cards, we could easily see a move to 126 and even 130. I know that some people don't want to hear that, but others would be very thrilled to hear that. We did not get a close yesterday above the 117.73 high, but we are currently trading just underneath it. So continuation above there in the upper second would target somewhere around, 125, 126 initially, potentially giving room all the way 130 to 132 now for the upper third, which, just so you know, that could even go more. We've seen the upper third even in this kind of, now it's starting to get its more aggressive, expansive look. But we did wick above it by a couple bucks here and a couple bucks here as well. So you could even entertain 135. But, I'd start to look towards, 120, 125. Those nice even numbers first, 120 and then, obviously 125 being an odd number. High would come in from here. I would need to see closes below 103.83. For the daily high from here, because it would have to get below yesterday's candle. Yesterday's candle would actually be the 110 region. Sorry. That would be the daily high set based on this Thursday candle that is currently open. Oil. Some have wanted me to look at oil. I haven't checked on it in a while because I haven't really needed to, but now it is relevant because on Tuesday it came right up to the high at 62.59, closed right on it, came down, swung below, and then moved up towards 163.5, and now in towards the 163.70 area. Next big area is going to be 65 to 66 bucks. I would say that you need to see this high taken out at 66.45, 66.50 area. We can start to look for continuation. Be aware of the lows over here on the daily, in the 65 region though. So, 64 to 65 even. And this is something I talked about quite a while ago, but now it's starting to play out to the upside here after getting that big bounce off of the major support level between essentially 51.75 to 55.72 here. Or I'm sorry, 51.76 to 55.72. You can basically look at it between like 50 and 55. Big support zone. Nice move up on the daily. Is this getting close? It's headed towards that resistance, right? Then it's all about, can it break out above the primary area here above 65 to go and test that high at 66.42, 66.50 area. Natural gas, just check on real quick. It did throw another wick up. What did it hit here? 743. Could potentially start to head back down, especially if it closes anywhere below 575. Then we can look right back to the 480 to 490 region. If it drops that below there and loses the actual low here, we're probably looking back to the mid fours, around 440, 450, and then eventually down to $4, $3.90 to $4. Otherwise, looking towards $8 to potentially, if it gets really aggressive, $8.50. Let's go ahead and check on traditional markets post FOMC. We had the daily kind of chopping around. Now, again, the 48, 450, 431, 400 area is going to be the area to watch to the downside. We now have some pretty common overhead resistances to pay attention to up here, anywhere above 49,621. Essentially looking right up to, 49.9 to 50. And then above there, 50,200 to 300 is fair game. Now, if we do see 48.4 to 48.5 dropped, I'd start looking at 48 again, and then anywhere below the 47.9 region on the lows here, we need to start paying attention to the mid 48s. And that would be on expansion. So locally below 48.5, I would say, look, just eye that low if you see it intraday trading below there. NASDAQ did gap up and hit essentially the areas that we were looking for. 26,000 with a high coming in at 26,150. So, I was talking about 26,000 to 26,200. Anywhere above there, start looking at 26,003 to 4, and then 26.5, right? Pretty quickly thereafter on an expansion. And right now, I would want to see it trading and closing above around 25.50, where the basis band is, to kind of try to put in a higher low if this ends up being a high. But even more if it's above around 25.750 to 25.8 by this upper first, then that would probably provide for it to go for the actual highs here at the 26.182, 26.2 region, and then potentially get expansion above. Anywhere below the 25.6 area, 25.5, we have to entertain trips back to, the lower 25 region to 25 even. If it drops that, we're looking probably mid 24s pretty quickly thereafter. SPY, 695, did it hit our target? 697.84. Not quite. But again, this is another one. So above around 690, 689 and a half to 690 looks good. Even better if it's closing above 694.15, 695 region. Anywhere below the basis, then we have to start looking back towards that 685 region. Anywhere below there, right down to 680. If it drops it, we're looking the mid 670s down to 670 even, and then the mid 660s pretty quickly thereafter, because it would be expansion. Anywhere below 680 would be expanding into the prior support areas, and if it gets through them, it's probably going to drop pretty quickly. The path of least resistance right now, I think, would be to the upside, but it's really going to be on closes above 690. And that's pretty much all I got for you. We'll check back in on Friday for the Friday wrap up. Just be aware, you're going to see a lot of this bear flag talk, mid 50s talk, 60K talk from here. The game is on. Understand there's a lot of structure on the lows over here, and there's a lot of structure here. Now, granted, that would get, that entire structure does encompass the mid 50s into $60,000, but we got to see it actually come to fruition if that were going to play out. I would give it a chance in this area based on some of what I'm seeing, and then kind of come back to it as we see where we get the closes towards the end of the week on Friday. I hope you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. Go ahead and like and share this out there. That really does help. Spread the word if you did find this helpful. And I appreciate you. Keep in touch on the comments down below. And if you do have other requests, I know I keep forgetting to look at one that Milo keeps bringing up. And I will get to that on Friday, actually. I'm going to put that in my notes. And if there is others that you want me to look at that maybe I haven't checked on in a while, or you think would be relevant to looking at more of a kind of a higher level overview of a sector or representative of a sector, go ahead and post it down there in the comments and I'll try to take a look at it. We'll do a little bit of ticker rotation here. All right. Take care. Landy out.